Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead, program sponsored by Delta.Exchange. Last week was a terrible week. The first 2 weeks, Nifty shot up nearly 1,000 point, and the last week it was a correction week, especially after the Fed meeting, very hawkish tone by the Fed chairman. So markets started falling all over the world, and Nasdaq 100 has fallen 600 points in 2 trading sessions. On the third day also, it tried to recover, but at the end of the day, closed in negative. So the things are looking very bearish. And earlier, I said when 19,700 was crossed on the higher side, so I said the markets became bullish, and that bullish view continued, and Nifty went almost to 20,200. Then after that, now market started reversing. And I said again, when 19,740 was broken, so I said markets are becoming bearish technically. So in fact, as of last Thursday, the markets have become bearish, but Friday the markets fell, and now it is indicating, GIFT Nifty indicating another 50-60 point fall on Monday morning. So which means that markets are likely to open gap down. And because on Friday, US markets fell for third straight day, so Asian markets are likely to fall. But the fall may not be significant because, US markets have already fallen. Nasdaq 100 has already fallen 4% in 2 trading sessions. On Friday, it closed slightly negative. So the pace of fall may go slow in US. So its overall markets are likely to be bearish bias, but not big downfall from here. So looking at the open interest, 19,500 put option will be having a very good support. And there's a huge addition of open interest at 19,500 put, and call option 19,800 call option. So in a very short term, the support is at 19,500. So resistance is at 19,800. So in case if there is some short covering here and there, if anything happens, so, the 20,000 will be the next huge resistance. So the first resistance at 19,800 and the second resistance at 20,000. Of course, the third resistance will be all-time high around 20,200. At the downside, so you may remember my box theory also. So after trading briefly in the box 20 to 20,500, now it has come back. So now this box of 19,500 to 20,000, so may continue for next 1 or 2 weeks. So until things can settle down. So one good thing about our market is that, the Indian uncertainty related to the special session of parliament is over. So there was a hell lot of rumors, but nothing has happened. So the special session of parliament is over. So there is no uncertainty. So it looks like, the people are talking about one country, one election, and so on. Nothing has happened. And probably now the government has to deal with the Canada tension. So somebody was telling the Canada pension fund has become Canada tension fund now. So everybody is under tension whether Canada pension fund will be selling in Indian markets or not. So the way things are developing, I'm sure whether the Canada pension fund is selling or not, but at least the big FIIs will stop buying. And that is evident from the FII data. From the month to date, FIIs have sold more than 18,000 crore. In the last 1 week alone, FIIs have sold for more than 8,000 crore. So FIIs are aggravating their selling. So there is no way markets can be very bullish if this kind of selling continues. Moreover, coming week is the last week for expiry. There will be a lot of volatility, and markets tend to be very volatile. And anyway, so I'm expecting Nifty to trade between 19,500 and 20,000 for the coming week. And globally also, markets are slightly bearish only. And this US bond yield is going higher. So when the bond yield keep going higher, there'll be less incentive for FIIs to pump in the money into our markets. And, even in Singapore recently I went, and in Dubai also, the banks are offering more than 5% interest rate for the US dollar deposits. Then when they can get risk-free return of 5% in US dollar, why should they put money in equity market? So definitely FIAs will be net sellers, and the domestic institution also seems to be losing its steam. The last few trading sessions, domestic institutions did not buy much. So be ready for a volatile market, but it's going to be consolidation with a negative bias. So that is my view as of now. If there is any change in the view, I will let you know during the pre-market or post-market report. So hope you enjoyed listening to this audio. Thank you for listening.